Hello, folks. I'm Rodney Hathaway, Chief Investment Officer here at Waukesha State Bank Wealth Management, and welcome to our December edition of Market Chats. As we wrap up the last few market trading days of 2025, we would like to reflect on a point that may seem rather intuitive but warrants discussion. Investors often try and gauge the sentiment of the overall economy to determine whether it's a good time to be bullish or bearish. Considering two-thirds of our economy is driven by consumer spending, if buyers are feeling good about things like job security and finances, then economists tend to be more sanguine in their outlook. It is important to discern, however, that there is a widening gap between consumers who are reliant primarily on salaries and wages for spending power versus consumers who generate income mainly through assets like the stock market, bond market, and real estate. Market volatility spiked last month on the heels of the government shutdown and persistent inflation worries, especially with healthcare costs. This was reflected in the University of Michigan Consumer Sentiment Index plunging 29% year over year. On the surface, this plunge in sentiment may portend a bearish outlook for the economy and capital markets. However, with the major stock market indexes up roughly 20% for the year and the bond market gaining nearly 7%, consumers who have investments in these assets are probably feeling pretty good. In fact, household net worth for the U.S. is near record highs at roughly $180 trillion, driven in part by strong stock market returns in recent years. Stock ownership by American adults continues to increase. Roughly 62% of adults own some form of equities. This is up from 52% 10 years ago. Employee participation in company 401k plans has been a very important driver behind this broadening of stock ownership. Nearly 24 million Americans have a net worth of at least $1 million as of last year. As stock ownership proliferates with American adults, we believe this wealth effect will have more impact on consumer sentiment going forward. While weekly job reports data will always remain an important component of economic forecasts, data reflecting asset accumulation by Americans will have a large bearing on consumer sentiment in future periods. It is important to note also that as the baby boom generation passes through their retirement years, they will be a very important cohort in the consumer spending landscape. These retirees have both the time and discretionary money to spend on goods and services, bolstered by gains in their investment accounts. A key takeaway from our discussion today is that it is of paramount importance to accumulate assets. The earlier you can start, the better, to allow the magic of compounding to occur. You may have seen some recent initiatives announced to encourage children to invest in assets also. Michael and Susan Dell will be donating $6.25 billion to American children to start up investment accounts. President Trump also announced that American children born between 2025 and 2028 will receive a $1,000 investment account that their parents can continue to contribute to also. This widespread accumulation of assets will be a game changer for the future of American wealth for the next generation, we believe. As always, we love to hear more in-depth discussion with you on this topic of asset accumulation, so please reach out to one of our advisors. We wish you and your loved ones a very Merry Christmas, and we look forward to future chats with you.